And a very good morning to everyone, and welcome to the TriggerCharts pre-market rundown for Friday, January 15th, 2021. I'm Andrew Horowitz, and I am the co-founder. There I am. I'm the co-founder of TriggerCharts, and we're going to go through a lot of really interesting topics today, as we do each and every Friday. So buckle up, because we're going to have a lot to talk about. Of course, this is also the opportunity for you to spend some time looking at the things that you're doing and having us help you understand more about how the indicators that we use can help you with some of the futures or currencies or cryptos or ETFs or stocks that you follow. Before we go any further, I have to mention, as I always do, first of all, this is being recorded. It will be available on the TriggerCharts YouTube channel as well as over on TriggerCharts.com. We'll have a replay as we do each and every Friday so that you can follow along. And if you haven't had the opportunity to see some of the ones in the past, you can go back and check those out. Also, on the TriggerCharts.com site, there's a ton of educational materials to make sure that you understand all about the colors and the algos and how we get our swings and the radar, altimeter, autopilot. Everything is all on there. Some very short tutorials to some very long discussions, and also webinar replays from times that we were asked to present at various different platforms. Everything we talk about today is for educational purposes only. It is not an offer or recommendation to buy or sell any security. It is simply here to give you some understanding of how we view the world of technical analysis, as well as how we view the world when it comes to some of the things that are going on right now, some of the things that are moving markets, and there are a lot of things that are moving markets right now. So let's get into that discussion. As we do, we start out every week with kind of like a broad brush overview of what's happening, kind of the discussion about, why are things happening? Now, sometimes that's important. Other times it's not. We don't have to ask why, right? What we have to do is just follow along the process. Now, listen to me very carefully. Follow along the process, because sometimes things don't make sense. And even if we try to figure out why is the Dow futures down 193 today and the ES are down 20, we just got some stimulus bill out there and everything seemed to be all rosy and great over the last week or so. We have bank earnings that are coming out today that look pretty good, generally speaking, on the surface. Well, what's the reason? Well, we can come up with a lot of reasons. It's not always important about the reason. It's important to follow the process. It's to be disciplined in understanding what you're doing with our various indicators from a technical analysis standpoint. The other things are important. They're the backdrop to understanding what the bigger picture is. And let's talk about that right now, because right now the big picture is rock and roll. I mean, right now everybody's like, everybody in the pool, that there is no better place to be than equities. They're going to go up forever. I have seen that there are people with no experience, zero experience, that are in some business somewhere, opening up chat rooms, not joining, opening up chat rooms, trying to get other people on board, maybe even charging them to get their tips, because they took $2,000 and they made it into $4,000 over the last month or so. Now that's great. That's 100% profit. That's wonderful. But is that really investing? And really, what are they doing? What we have right now is a speculative mania going on in a lot of areas, and that could make you very wealthy. That can do a lot for your bottom line. It's like musical chairs, though. When we have these speculative FOMO manias that go on, we know that some of the prices are elevated to a point that they shouldn't be, to a level that when we see the divergence from things that simply are like the moving average, a 200-day or a 50-day moving average, where we see there's a 2 or a 3 standard deviation move above that, you have to be like, what's going on with that? And what should I do about that? I think that, when we look at what's happened right now, we are definitely primed and due for a pullback of sorts, realizing that there are a lot of people that are also looking for that and saying, hey, I want to buy on a pullback. Now, is that pullback a 1%, a 2%, a 5%, or a 10%? We'll see how it develops. But by utilizing the tools and the process and the discipline, you can stay on the right side of the trade. It's pretty simple. It doesn't always work out exactly as planned, but if you do, you have more odds in your favor for a high conviction, high confidence trade, and that's what this is all about. But everybody's in this kind of let's go, let's get that market open, and what we've seen is that Pavlovian response at 9:30 in the morning as the bell rings. We see a major ramp immediately on the NASDAQ, the S&P, and the Dow all together. We've seen the small caps outperforming dramatically, made up of a lot of energy names and financials lately. And of course, those have been in favor. They've been in favor more so than the tech trade and some of the other names that you see ramping recently. When we see the XLE or the XLF, I mean, on the right-hand side here, you have the XLF. I mean, since November, went from 25 to 31. That's a 6-point move on it. It's like a 25 or 28% move on the financials after they broke out. And we can probably bring this up a little bit more. Yes, they had that massive move lower from 31 down to 18. They were the laggard last year, as was energy. And those are the names that are being picked up right now. I will tell you that there are plenty of trading opportunities. If you're finding yourself unable to find anything, the question is, what are you doing on a regular basis to look for things? Now, one of the things that I do on a regular basis every morning, as a matter of fact, it's kind of the start of the morning and throughout the day, I have a screen, something like this. Don't worry about the charts on the right. Let's look to the left. These are hot lists. And the way to get to hot lists is you go on the apps and you go over to, I'm going to move something around here. Hang on a second. Okay, you go over to hot list right here. And you click on the hot list and it brings up a hot list. It just does it very easily. And what is this? Is it equities, all % gainers one day, which kind of is what I have going on up here, right? Same thing. This is the same as this. You see the names are the same. But you could do other things that are pretty interesting. For example, if you take this and go down, I don't know if anybody's used this. If you haven't used this, you need to put this in one of your workspaces. You could do things like gapping up, gapping down, % losers for the day, % gainers. Okay. The other thing that you could do is, let me find it. It's spikes. Where are my spikes? Here. Rapidly rising, rapidly falling. Now, this is pre-market. It may not actually show up too well. But what this does is this shows a 2-minute % change that are moving very rapidly with volume. So like IDEX, for example, net change 12%. The last 2 minutes it changed 2%. So it's giving you kind of what's going on here over that period of time. The SPY was up. Now, again, this is not as, in my opinion, not as good in the pre-markets. I would look at this in during the day. And you can extend this to 50 results if you want and see what's happening. It's only 17 right now because it is pre-market. So I wouldn't do that. But you can do rapidly rising, rapidly falling. You could do breakouts above, breakout below the 52-week low on $1, breakout about a certain % high. We'll tell you what's going on. Play with these. I think these will be very helpful to help you get that. If you haven't been using these kind of things, you can. I would probably put 4 on a screen. I'd make a workspace with % gainers one day, % losers one day, and put rapidly rising and rapidly falling on the right, so you can kind of see what's happening there. And keep a list. This will constantly, see how it just updated? This will constantly update. You can see some of the things that are really plowing ahead today. You got this Toughen Software, and you got BlackBerry, and you got Tilray up 15. Wow, Tilray up 15% today. Pretty impressive. Been moving up right now, trading at 21. It closed yesterday at about 1866, up 16%. Another marijuana stock that have been off to the races. Go, make it happen. So this gives you a really good way to look for things like, hey, what's happening with Lordstown today? Lordstown is spiking down 6%, et cetera. So this will give you all of that and give you some really good ideas on the moves there. So let's go back here. Okay. Liquidity is plentiful right now. I think that's a really important thing to understand. The question is, when does it end? Right now, we saw that there was some stimulus. There was a 1.9, it's not 1.9 billion. That's wrong. That's totally wrong. It's $1.9 trillion of new stimulus that was presented last night. Some PPP programs, direct payments in the form of $1,400 checks to every individual, an increase in unemployment from $300 to $400 per week. There was over a $400 billion vaccine program to help the states distribute, as well as another $1 billion amount to go to the states to help them out for various holes in their budgets, and money pretty much for everyone again. So we're talking about another almost $2 trillion on top of the recent $900 billion, on top of the $2.2 trillion, on top of the $4 trillion that the Fed has increased their balance sheet. So we're talking about 4, 6, 7, $9 trillion. Woo! $9 trillion. And you wonder why the stock market is moving up. I mean, the money supply has expanded dramatically. If you go and look up a Google search for the M1 money supply and you see what happened over the last several months with the money supply. That is money that is directly in the system, the cash available to spend, so to speak. And that money has been trickling into markets on a regular basis, and it doesn't look like it's going to stop. Yes, there will be backups. There will be corrections in the market. But I got to tell you, with all this money sloshing around and this excess in the markets, and then with the vaccine, people going back to work, and not to mention all the people, this pent up demand of people saying, you know what, I want to go to the movies. I want to go to a bar. I want to go on a vacation, even if it's local. I want to just get the hell out. I mean, I'm sure you have had the same feeling. I mean, I have, right? Let's get out of here. Let's do something. Let's go to a restaurant, anything. Earnings season is underway. We saw some of the banks report today, and lo and behold, no surprise to anybody, they beat by a mile. JP Morgan, Citigroup came out. Wells Fargo had a surprise beat. A lot of that is due to the fact that they released some of the holdback they had, the loan loss provisions that they had. They released some of that, and that came into the earnings. And so some of that is questionable. If you look at actually the stocks today, and we'll look at that in a minute, they're down last I saw, because the reality was that the earnings were good, but really only goosed up primarily due to the fact they reversed some of the loan loss provisions, which I don't understand how they're doing that with in the recent and in the pending and the recent legislative changes, how we still have a mortgage moratorium as well as an eviction moratorium, or a delay, if you want to call it, whatever you want to call it. It seems kind of interesting. I want to mention that pretty much everything is for sale right now. Some of the numbers we've seen recently on the moves have been quite outstanding and outside. Again, IPOs, SPACs, reversals off support. These have all been major themes in what's going on. One of the other themes that is happening, the themes that are happening right now, I think, is the idea that there is inflation. Some people are asking me in the chat about gold, and we'll get to that in a second. Gold, silver, precious metals, Bitcoin, you name it, it's been on the move. It's interesting because we are seeing that there is no end to when the Fed is going to let up, and they made that very clear on Thursday. The Fed, Jerome Powell said he's not even thinking about increasing interest rates. And even if inflation does start to pick up, he doesn't think that there's any opportunity to move up rates for some time until we really get a significant inflation number. It seems to me that we are going to get there. Now, whether it's in a month, in a year, it does seem that everything that's going on with the excessive amount of money that's being spent right now is pushing things much higher in terms of pricing. We've seen that food prices are going up. We've seen that commodity prices with lumber and copper, you name it, is pretty much going up. And you and I have seen a spike in our costs underlying everything and everywhere. And while it's not showing up necessarily, we did see that there was a 0.4% headline increase in the CPI and a 0.5% increase in the PPI yesterday, which you take that and you annualize that, which you really can't. But if you did, that's a 4.8% annualized inflation rate on the CPI and about 6% on the PPI. Now, on a year-over-year basis, we're still looking at, if you take all the numbers and average them out and look from a year ago, we're only about 1.2, 1.3% on PPI and CPI. So we're still in a non-inflationary market. But again, it seems to me we do have asset and risk asset inflation. I don't think anybody's disagreeing with that. We have seen that there are pricing increases, and the longer that we see rates as low as they are with the housing market as it is, and car market, boat market, jewelry market, all of that is going to feed into this inflationary number. Even though some of it's not directly calculated in the inflation number, it's all going to just push everything up. That's how it goes. It's a lot more money, a lot more stimulus. One of the other things that is a theme, and I think that we really have to focus on, is that nothing really matters. Eco, earnings, impeachment. I mean, we've seen it all. Pandemic. Nothing seems to matter. Right now, it's all about this bloodthirsty availability of getting in and making money quick, regardless of information. Under normal circumstances, I would think if we had a secondary presidential impeachment, even though it's only a week out, maybe markets would react. I would think that if we saw almost 1 million initial claims hit the board on Thursday, excuse me, that we would see a market reaction, which we did, but not that much. I would think that if we saw that there was a lot of uncertainty about the amount of debt that we're piling on, that'd be some concern. There's not. And the economics slowing down a bit. Retail sales today coming in disappointing, down 0.7 when it was supposed to be flat for December. A lot of things that are going on right now, again, are background for the bigger picture, which is, man, the market is on fire. I need a piece of it. In the economic, there really isn't a material change. A little bit of, I would say, lumpiness in some of the numbers. The one big thing, retail sales today and also the initial claims yesterday was a big issue in my opinion. So I think that when we look at this, even though there is a massive amount of dovishness that is in place by the Fed speakers, they have begun talking about tapering their bond purchasing program, the quantitative easing program. That's something important. Next 7 days, what do we have to look for? A smooth transition? Maybe, maybe not. Talking about some crazy potential for protests at every armed protest, whatever that means, at every capital of the country. So we are on high alert for civil unrest. I don't think markets really care about that either. And we're going to see about the Biden administration priorities. Talking about the KRE, closing in yesterday at a +2. We're still in the pretty warm and lukewarm area, but still not overdone to the upside, in my opinion. What else? Economics, I talked about that. We got the University of Michigan. I didn't see that. I think it's coming a little later. Beige book yesterday said that everything is just doing whatever it does. Nothing major. Next week, Monday, the markets are closed for Martin Luther King Day observance. We do have initial claims towards the end of the week. Very light week of economics. We have housing. That says housing starts, but we have housing starts and the Philly Fed. Let's talk about some of the stocks. Some of the stocks I've been talking to you about. I hope you have been climbing aboard. Have you been working some of the stocks that we have been following? Please chat me right now. Have you been taking up some of those setups that we have been projecting to you and talking about? Because even though it's not a recommendation, you really should have done your own research and found these to be just absolutely skyrocketers. One thing I want to talk about here today, I want to talk about this stock. I want to start out with a little funny story. And this is going to shape what you have to be aware of in the market right now and what you have to be careful about. This company is called Signal Advance, okay? SIGL, okay? And if you notice, by the way, just to let you know what's the D and the HB. This is a penny stock. It's a pink sheet or something. It's delayed. I have every subscription. It's still delayed. And maybe I don't have super small pink sheets that I would never trade, but it's a hard borrow. Okay, that's what that means right there. Now, what's interesting about this, you'll see this stock was trading at about 64 cents. 64 cents! Forever. Forever and ever. Could probably go back even further on this. Didn't even trade all the way back here. 60 cents, right? Okay. Elon Musk came out with a tweet and said something, hey, use Signal. Now, what he was talking about was an encrypted email messaging system or something of that nature, and people were like, oh, that's that stock Signal. And they bid it up from 60 cents to $70. Now, this is not something I would have even advocated even thinking about trading. Stock is still trading at $11.93, and it has been proven and shown this is not the stock. This is not the stock that he was talking about or had anything to do with it. It's still trading at $11, where it was trading just before the announcement. I'll say it was $1. Let's just be kind. $1. It's still trading 10 times higher. Why is that? Well, there's a lot of people holding on to stuff saying, oh, I'll hold on to this, whatever. Maybe it'll come back. I bought it at $5, or maybe I bought it at $33. I'm just going to wait. And if I don't sell it, maybe it will come back. But I just want to tell you the dynamic of the market and where we are right now. This whole idea of just buy stuff ravenously like there is just, no risk. But there was risk. You picked this up at about 50 or 40 or 30 or 20 or 15. It's trading down $11 right now. So be very careful with the news and what's flowing out there. We've been talking about this one, SPCE. One of the things that happened yesterday was ARK Investments said they're going to come out with a space or a outer space or some kind of ETF, and this would have been the main name in it. Remember, we talked about when we launched off of this level, of 25, there was a good opportunity. There was really good support down there. I drew that all the way across. I showed you how to make those boxes. We saw it start to pick up, base out, and then we went from 25 to 33 yesterday, trading down about $1 today at 32, but still an incredible advance on this. This is the Richard Branson Virgin Galactic space mission program. And it's kind of an interesting play. They're not making any money right now, but there is some future in this that they're talking about. I've been talking about CRISPR up, $10 again today. CRISPR, again, look at all the lines that we drew here. We said, hey, there's some support here on the bounce. Let's pick that up and let's move on that. We got some consolidation. Again, a very simple box can draw where our ranges are. We got consolidation again. And then we got a big bounce on the upside. I think that the biggest issue about the move here was more so not the specific trade in, trade out, because I think if you look on probably a weekly basis, this is where this all played out. This is where 105 back in November were picked off the weekly. Now, a lot of people write me, and they write us and they ask, well, what can I use a 5-minute time frame? Now, I want to show you the difference. This was a move from 105 to 210 on a weekly. Let's go to a 5-minute time frame. 5-minute time frame just on this since 114. You got in at 194. You went 214. That was a night, well, back and forth a couple times, but basically a right nice move in. Then there was all this move in and out, in and out, in and out. You want to trade for this one happened to be a really good trade, 10 points on that. That was great. That's awesome. But if you want to trade for big money, you stretch it out a little bit more and you look for the bigger trends. That's why on the top, where we look at the radar screen that is based on multiple time frames, and we look at CRISPR, which is 10 long on the weekly, and you go across, that's why we look from right to left all the time looking, hey, you know what? Where are we going here? We're looking from right to left on this. We always want to just go this way across, look right to left, have our eyes moving right to left on the charts. And what that does is it gives us a really good indication of what the trends are from a longer term time frame and backwards. The same thing we do here. Where are things? Well, we didn't see any resistance. This is a black hole in this whole region. Just look at this. This giant area of a black hole. There's nothing really behind that. So the opportunity for it to ramp into unknown territory was very high. And we showed you that. And that's what you want to look at. The other thing is the aileron was very positive for a long period of time. The aileron was always in this whole mess that was going on here. The back and forth and the choppiness was pretty positive. A couple of overbought indications right here, but still above zero, giving us the confidence of a double indicator, two different indicators that were giving us confidence that there was a lot going on there. Triple D, you look at some of these names moving off of that base. You had a great opportunity to get in somewhere at about 1380 if you were early on. Up to about 22. Then you got some consolidation. Another rip yesterday. These are a little bit too significant moves. The moves are too significant, too fast to really capture these. Right now, trading at about down 10%. This is a 3D printing company. One that's kind of interesting, that's kind of sitting in the background, is this one, I think. We've seen similar moves off of this $10 to 25 consolidation. Very wide range right now. Trading at 23 and change. 23.50 about right now, give or take right about here. Closed yesterday at 23.35, so about 7 cents. I do think you have the opportunity to kind of hit this 25. If you get above this 25 on this, this is going to ramp now. But realize you have a range of about 18 to 25, pretty wide range on that. Workhorse is another one that we've been talking about, and this has kind of been, I would say, a basing pattern with an up and down that just doesn't want to really reach out. So right now we're trading down ever so slightly in the morning here. Workhorse, another SPAC, another truck company. They're waiting for a deal with the post office. Once that goes, I think you'll see some opportunity to the upside. A lot of the things that are really playing right now are our EVs or related. Another one is QS, which is lithium-ion batteries. This stock went, again, from $20 up to $130. You know what? Right now, what it looks like to me is we do see a really interesting basing pattern. Look at this right here. We see this baseline where we could draw a line, give or take at about $56, right about there, or 55 and change. Trading up a little bit today. This is, I think, an interesting play on the idea that there is the desire, need. There is the input for batteries that is coming, lithium batteries. Let's see here. What do we got here? This is XLF. This is the kind of straight move higher. We've seen, again, the aileron. All of these are available for a 10-day free trial, by the way. Aileron's an add-on. I like to use it because what it does is gives me a secondary level of indication of the momentum. We blend about 15, a dozen or so different indicators inside of here for momentum oscillator. And what we try to do is come up with where this is playing. When you get these crossovers, it's really good. And that's exactly what happened here. You get this oversold, then a crossover. You got on the upside, you get it holding on support, and then you get this launch. And right now, we've seen a couple of times come down, but generally speaking, this has been just a runner for a long period of time. Bank of America also in with the banks today, down about 2% in the pre-market. So is JP Morgan. Zoom Media has been interesting. Zoom Media has been on a downtrend for a long time. Look at, you could have seen that. Look, it's just, again, I like to look at colors because I can easily just kind of open my eyes and see what's happening. So what I see here is, we got a lot of red down here. We got a lot of magenta. We saw that roll up yesterday off of the base. Again, a nice basing pattern. We got the short that was called at 401. Closed it yesterday or 2 days ago at 334. Yesterday was an alert. 2 days ago was an alert to go long at 360. And it played out to 383, trading at 397 today. So you may see some opportunity. Now, 397, let's look at that, where that is in the chart, right at about that level, 397.50, right at the level of resistance that you would expect it to be at right now. So that's an important feature to look at right now. You could just simply, again, like I like to do, and I think it's very helpful, on top of the lines that are already built for you, what you do is you just grab a quick line tool, you draw the line tool where that is, kind of connecting as many as you can across, or some key levels of support. So kind of right in between here, and that's at about your 296 level, right above the level of support is where it's hanging out. So I would say that, if you can get up to about 402, 400 probably being a round number level that you want to look at. Bitcoin, been on a tear. Look at that. Again, just looking at colors, all green. There's a daily base on this. Down about 1,700 today, right at the 3,700 mark. This is a really wide range right here. Down to 32 is where the support is. Now look at this. If you use this for Bitcoin, you had some really good support levels that were held right about the 32,000 level on Bitcoin. Will it get back down to there? Right now trading at, where is that? 37 and change, right? Oh, it's right there. 37 and change. It looks like it's, I don't know. There doesn't seem to be a lot of support on this when I look at this. Let's take a look at our radar. Yeah, this is nothing up here. You get below this level, you get below the 37,000 level, I think that you have a little bit less volume that was traded here, and that's going to be a concern down to about 35,000 on that. But they are holding that 37,000 right now. Somebody asked me about gold. Any other stocks that you want to talk about? I'll be happy to talk about in the few minutes we have left. Gold. Gold's been in a pretty ugly, we see a magenta here. You don't usually see those magentas. That is a sign that the trade was busted. Went below a significant level. We saw that a few days ago. Okay, same thing with silver probably. A little bit different. Trying to climb that wall back up that we saw. Silver down about 224 today. There's just generally a sell-off going on in the precious metals right now after a pretty good run-up. Look at this on a weekly basis. We saw this nice run-up for about 140 up to 190. Now on a weekly, it's a bit clearer. You can see the consolidation. 170 or so is probably a name that number that I would look at. Somebody wanted to look at CCIV. So this is there's not a lot to look at here. I'll tell you right now, because this is a SPAC. It came out a couple of days ago with some announcement that they're going to roll in, another firm in there. Very exciting. People got excited. I actually saw this at about 14 or 13. I decided not to take this trade. Trading about $17 today. Interesting, but yet there's not a lot to go on because it's just this, crazy SPAC. You have to trade that on a shorter time frame if you really want to see what's going on. Any other symbols that you want to talk about before I mention that, of course, all of the information will be recorded and a 10-day free trial. Also, anybody that signs up for a full subscription, a new subscription to the TriggerCharts Commander Series, will get a 4-hour personal training course online. You just go online and you can take it at your leisure. It's an evergreen that we did a number of years ago, but $199 value. So it costs you $149 for the indicator. You get $199 value. Just send us a note to support@triggercharts.com, and we will definitely make sure that you get that access to that. All right, with that, nothing else here. We see the NASDAQ starting to move up a little bit towards the open, as we've mentioned before. Still seeing a little bit of shortness being or selling happening here in both these sides. We may see this weird day again when the NASDAQ's up and everything else is down. Anyway, thanks for joining me. I'll see you again next week. Have a great long weekend. Thanks a lot.